All right, so I think we can begin now. Hello, everyone, once again. Welcome to today's session, End-Year Accounting and Audit Processes. My name is Leonard Gisu, and I'll be your moderator for the session. So today we're going to have a two-part webinar. The first section will cover end-year accounting processes, and the second segment will cover audit processes. I just want to remind you that this webinar will be recorded. So if you do need to switch on your video, just remember that. We will also be taking questions at the end of the webinar. You can post your questions on the chat section. Should you have to leave the webinar before the end of the session, you can send your questions via email to info@starlingafricallp.com. We will attach the email on the chat section. So today I'm joined by two gentlemen, Jacob and Bernard. I think you can just do a brief introduction of yourselves before we proceed.
Thank you, Leonard. My name is CPA Jacob Nyakaku. I work with Starling Africa.
Bernard, I think it's your go. Bernard, you with us? Okay, as we wait to get Bernard, I'll just do a brief introduction of the firm. So Starling Africa is an independent financial advisory firm established in 2017 with the objective of providing audit, accounting, immigration, and business and company secretarial services to the clients. I don't know if we have Bernard yet. Yes, we do.
Morning, everyone. My name is Bernard Njama. I'll be taking you through the audit processes, basically the interim audits and the importance of the interim audits.
Great, thank you for joining us, gentlemen. So yes, today we have an accounting segment and an audit segment. So to begin with, we will begin with the accounting segment, and Jacob will be taking us through that. Jacob, the floor is yours.
Thank you, Leonard. As I had already introduced myself, my name is CPA Jacob Nyakaku. I'll be taking you through accounting period close processes, basically which are done at various intervals with the culmination of the end year period closure. So welcome all of you. I'll be sharing my screen for a PowerPoint presentation as we go along. Thank you. I hope you can see my screen.
Yes.
Okay. So the major objective of every accounting professional is to ensure that we have accurate records and to ensure that we do a period closure which is accurate and in a timely manner to enable us have good financial reports for decision making. So in this webinar, we are going to touch on end year or period accounting process, the best practices and compliance, challenges of a period close, and tips on how to make the period close more efficient. So just as a way of introduction, we are in an ever-changing world of finance and accounting, and there is always demand by the various users of the financial reports to ensure that we report in a timely manner and as accurate as much as possible. So how to do this is very important towards generating good financial reports, which will enable the organizations make their strategic decisions in time. So proceeding, the period financial close is the process of preparing the financial statements for a given period, recording all transactions that took place during that time, and then we summarize those things in form of financial statements. Basically, the end result of the entire period close is to have accurate financial statements to enable the users of the books to make their own decisions, and also to enable the stakeholders of the business, basically the members of the public, the shareholders, the government, to use this financial information for the various sources. And when I talk about the government, we are talking about the regulatory arms, the KRA, and all that. So the process, this is what is very important for us to be able to get it right. So every process without planning is doomed to fail. So the period end process must start with proper planning. When I say period end, I could be talking about monthly, I could be talking about quarterly, semi-annual, or yearly. So period end process must begin with proper planning, which must be aligned to the company's reporting timetable and the various deadlines. We must have proper cut-off procedures, which must be observed to ensure that we get the correct period. By just to digress a bit, by cut-off, it means, for example, in an organization where they maintain inventory, having a proper cutoff ensures that what time do we stop and do inventory for the purposes of reporting. So the process should be as clear as much as possible. The next one is bank reconciliations. We cannot go wrong on this. Proper bank reconciliations ensures that all the payments are booked and are recorded, and it will also ensure that we do if there were returns or other checks which did not go through, to do follow-up on that. Discrepancies must always be resolved before you close the period. Now we have the biggest one, which is the accounts payable and receivable reconciliations. This is basically our suppliers and our debtors. We must always reconcile our debtors because we want to maintain good relationships with our cash flow. Debtors must be able to be reconciled and ensure that payments are recorded in time. And also the suppliers, without proper cash flow coming in from the debtors, we will not be able to have enough funding to fund our accounts payable. And the biggest problem for an organization is to have problems with the suppliers. Another step is the review of period mismatches. In addition to this, all transactions must be ensured that we post them to the correct ledgers, and any mismatches we should be able to rectify before we do a period close. Currency revaluation. Every organization has got, most organizations operate in a multi-currency environment where we have different currencies. We have the rand, we have the euro, we have the sterling pounds and all that. So without revaluing these currencies to reflect the current period, the current exchange period, it will mean you have a wrong Kenya shillings equivalent. So that currency mismatch should go to a profit and loss account called a revaluation account. Without this, we'll be reporting wrong figures. And after that, we'll proceed to closure, and then you report. After you've done all the processes and the approvals have been done, now is when you can sit down and focus on the closure of the closure of the process, and finally reporting the same. Any documentation required for auditing will come from the final reports which we are given. Regulatory, for example, KRA will also rely on these reports, which we are going to give at the end. So, and also proper decision making will come out of the report, so you can appreciate the whole process of making sure that we get this right. So that's just a diagram showing the whole process from what we need to do. And after that, we proceed to close and then we report.
Wow. Okay. Thank you, Jacob. For those of us who've just joined us, just a kind reminder that we will be taking questions at the end of the webinar. You could post them on the chat section. If you feel like, if you have to leave the webinar before the end of the session, you can send your questions to info@starlingafricallp.com. We will attach that email on the chat section. You could also just shoot us a message on any of our social media profiles. We have LinkedIn, Starling Africa. We have Instagram, Starling Afrique. We have Twitter, Starling_Afrique. Jacob, you may proceed.
Thank you, Leonard. We have some of the best practices in this whole process to make the process efficient. An efficient financial close is very important because it saves us a lot of time, and it ensures that we minimize the risks which are associated with the reporting. So some of the best practices is we automate repetitive tasks. We can always ensure that tasks like data entry, we automate them to ensure that we save on time. You can have a way of uploading, for example, you put them in a template and upload, bulk upload, to ensure that you minimize time on keying each entry one by one. Another best practice which we have is to maximize on technology. Technology is here to help us and to ensure that we achieve whatever our objective within the minimal time which is allocated to us. So there are some manual tasks which you can use which we can use technology to help us. You can imagine many years ago, before the reporting systems came, people used to do accounting manually. You debit here, you credit here. But through the use of technology, this one has been bridged and the process is streamlined. However, the use of the right technology matters. Otherwise, you'll end up having major problems towards the close of the financial period. Another best practice is to standardize the process. Ensure the process is standardized. Everybody should be able to know when are we reporting and what is the deadline for the date. Most reporting organizations always run problems whereby unrealistic timetables have been scheduled. Some of these timetables might be falling on a public holiday. So it's important to engage all the stakeholders to ensure that the process is standard. There are other departments which are also feeding into what is going to be reported. That's why the standard should be, the process should be as standardized as possible. Another input is for people who work with foreign entities, multinationals. You might find a multinational has scheduled their timetable to suit their home country. So, for example, Jamhuri Day or Labor Day, which is a fast. For local country like Kenya, it's a public holiday, but in another country, it's probably a working day. So those are some of the best practices to ensure that the process is as fruitful as possible. There's accuracy against speed. It's always best not to compromise speed over accuracy. Some entities report very early. Some report within the second day of the month. Others report within the third working day of the month. Others have even been given longer longer period up to 10th working day of the following month. However, we must ensure that we do not rush and compromise the accuracy of whatever it is being reported. Another best practice is to ensure we have a continuous accounting practice. As we all know, accounting is a continuous process. It's not an end month process or an end of the year process. Through a continuous process, we ensure that we post this, whatever is required on time. We do various checks to ensure we do various approvals so that the end period is just an easy process, not a headache for anyone. Another best practice is reviews. Basically, these are checking what you've done, basically. These are usually done after reporting has been done. So for entities which are doing monthly reporting period close, every month after reporting, you do a post-reporting review. This one will ensure that any errors which were reported in the prior month are corrected in the subsequent month. Any compliance hitch, for example, if wrong VAT was done, you always have another month to do the review. This makes the end of the year close as peaceful as much as possible. Okay. So we have challenges of period close. These are some of those things which we meet, which might not be, which unless dealt with, might make period close a challenge for all of us. The major challenges which you might have is time pressures. For all the people who have been in an accounting environment can appreciate the time pressure, the pressure that comes with reporting. Sometimes in some organizations, people leave the office even at 1, and some report even as early as 4. So it is very consuming, it's very time consuming, and also reporting late affects the various KPIs, the key performance indicators for the accounting staff. So managing time is very important if we need to deliver accurate financial records. Another challenge is lack of interdepartmental cooperation. As I mentioned at the beginning, accounting does not operate in isolation. It's not an island. It's basically a function of the entire organization, but it depends on every department to make it as smooth as possible. So that's why this one should be as smooth as possible, and every department should be able to liaise closely with accounting and the finance department to ensure that all the relevant records are not only provided in time, but are also as accurate as possible and within the cutoff periods which they should be given. An example is where the records keeping, the storekeeping department did not do the stock take in time or did not submit the stock report in time. It means that the final inventory amount might not be correct. So another challenge is data inaccuracy. Inaccurate or missing data can impact period end, leading to delay or leading to wrong output of what is supposed to be produced at the end of every period. Any missing data accuracy is very important so that we do not jeopardize the final reports, because the final reports are being used for several decision making that are pegged on the performance of the business. For example, a business might have 3 revenue lines. Out of the 3, only 1 revenue line is making profit. The other ones are just relying on another revenue line to survive. So you must appreciate that our data accuracy must be as much as possible. Reporting software. We have several softwares in the market for reporting the accounting, and this reporting software should not be inferior or easily manipulatable. Organizations should ensure that we only correct systems are used, so that we do not have any data manipulation or any data hacking or anything like that. And then finally, we have to ensure that the process is continuous. As I mentioned, accounting does not start at the end of the month or end of the year, but it's a continuous process over the year. As I move towards the end, we have 5 tips to make this period end.
Sorry, Jacob, before you proceed, just for purposes of relevance, you've mentioned technology and reporting software. Are there any examples you could give of any such technologies or software?
Okay, thank you, Leonard. For small and medium-sized business, those businesses which are starting, QuickBooks would be the most preferred. But as the business grow, you need stronger and better softwares. We have Sage, we have Oracle, we have Tally, Microsoft Dynamics. So you have wide variety of the softwares which you can use.
Yeah, okay, great.
So moving on to tips to make the process more efficient, we've put 5 tips to make this process easy, not a nightmare for any reporting person. Streamlining the process better prepares you in case of both internal and external audits, as my colleague Bernard will be taking on that. The first one is to use templates and checklists to avoid omission. If you use a checklist where you know, before I commence the period and close, I have to make sure I've done this: bank reconciliation tick, supplier reconciliation tick, currency revaluation tick, all that. Then it makes the process easier. Consolidate all transactions in one place so that you avoid missing any other document or running in between several folders. And ensure you have your data is backed up. Many people, not only in the accounting world, and have gone through this process of whereby they have data which they have worked on and it's not backed up. Then you lose the entire data and you have to start in again. Another tip is to implement company cutoffs. Ensure that the dates are very clear and there's 100% compliance to make the process as easy as possible. And then we automate the systems. In conclusion, in the current business environment, period end close have become almost mandatory in many organizations, especially the month end close. Previously, people would just sit in the accounting department and just relax and start working on the period end towards the end of the financial period. At the end of the financial period, that is when you will be able to see the gaps. Maybe somebody forgot to remit pay as you earn, and already KRA, the penalties and the interests are accruing. So this one is an ongoing process. And nowadays is in very big demand by most management and most owners of the businesses to ensure that nothing can go wrong. The interdependency of the departments is also a focus towards achieving this, so that everybody achieves their objective. That will be all. That will be all. Thank you.
Great. Thank you very much, Jacob. Thank you for your part of the session. For those of us who've just joined us, Jacob has taken us through end close process, best practices and compliance, challenges of period end close, and tips to make the period end close more efficient. For those of you who've missed any part of his presentation, don't worry, we'll be recording the session and we can make it available to you on request. If you have any questions, remember you can post them on the chat section. Again, if you need to leave the session in the middle, you can email any questions to info@sterlingafricallp.com or to the social media handles that I have shared on the chat section. As I earlier mentioned, we are having a two-part session. So the next session is an audit and an audit process for the NDA accounting, and yeah. So Bernard, I think Bernard is going to take us through that. Yes. Welcome,
Good
Bernard.
morning. Thank you very much. Good morning once again. From here, I'll be taking you through what we call interim audits. This is not a popular thing, especially for small organizations, but currently it's becoming a very popular, essential tool to implement right now because of the automation that has taken place, especially with our tax regime. So basically what we mean by interim audits, these are audits that we normally do before the end of the financial year. So it might be done after 6 months, 8 months, or 10 months preferably. So it's basically going through doing almost a normal audit for the accounting that has been done for like 6 to 8 months or 10 months during the period. Previously, this was done by organizations that were mostly listed like banks due to the bulkiness of their transactions, for them to be able to report to their regulatory authorities in due time. And then other small or medium organizations used to use interim audits as a way of ongoing risk assessments to improve the financial reporting and also performance reviews. Ideally, for companies that will pay things like bonuses based on how the company has performed, they would want to do an interim audit and forecast how has the company performed, so that when it comes to the first month of the following year, the audit has been closed and things like bonuses and all that are paid based on how the company has performed. But recently, with the automation of the tax regime, we've seen need to have all companies undertake interim audits before the end of the financial year. So as you all know, with the Finance Act and the changes in taxes or the tax laws, we have so much need right now to be able to review our books, assess where we are before the end of the financial year. So currently we have things we call audit triggers or key tax indicators that we need to monitor before the end of the financial year, so that by the time we are doing our final audit and reporting on the financial statements, we are in line with what we've actually provided or submitted to the Kenya Revenue Authority. One of these areas that we need to look at is areas like withholding taxes. So for organizations that ideally are in construction industry or consultancy, before they're paid, withholding taxes normally remitted before the client you paid. So for these particular companies, we need to monitor by the end of the financial year, the total withholding taxes that has been withheld, does it tie to what we have reported in our books of accounts? So if there is any variance, this needs to be corrected in due time. Reason being, if the withholding taxes, the revenue from the withholding taxes, if it's more than what we actually declare when you're doing our final audit, then a tax that brings about a tax exposure, and it's an indication that we've under-declared our revenue during the year. So that is on withholding taxes. We also need to monitor before, on a month-to-month or during the interim audits, the sales that we've declared as per our VAT returns, do they tie with our books? One of the variances might be brought about by you did a sale, a credit note was issued, but this was never implemented, either on the filing of the returns or in our books of accounts. So if there is any variance between the monthly VAT that we are doing And the revenue that you declare at the end of the financial year, that also brings a tax trigger or a tax exposure that will be chargeable to tax. Then we can look at also a need of credit notes. Previously, we used to, the timeline of issuing credit notes was longer, but with the new changes in the tax, the period has been shortened. So you'll find that we need to, the interim audits are very vital because of the changes of this tax system. So right now, assuming you can't raise a credit note beyond 6 months. So if you decide to wait for the whole year and do your interim audit, the subsequent year, you will not be able to claim the VAT that was declared in error. Another area that I'm going to look at is salaries. So we need to ensure that on a month-to-month basis, the salaries that we've declared on items tie with what we have in the books of account. So during these interim audits and before the close of the year, this will enable point out these particular variances that need to be amended and corrected in due time. So basically with the automation and with the interim audits, will benefit in the correctiveness, the timely of corrective of the issue that we have, and then it will streamline the end of year processes, and then also we'll be able to identify any tax exposures in due time. So I believe that is what I wanted to take you through today on interim audits and point out the audit triggers or the tax triggers that need to be addressed before the close of the financial year. Thank you.
Wow, very short and sharp. Thank you, Bernard. I can see we have no questions yet, but I think I will probably start you off with a question, Bernard. I know the audit and accounting ecosystem is highly standardized. However, are there any industry-specific audit processes? Yeah.
So basically, when we're undertaking the interim audits, our key focus for now will be the profit and loss areas. We will not focus on the balance sheet because we've not yet done the closures of the balance sheet items. So that's why our main focus will be the revenue, the cost of sales, the expenses that we've actually declared or are claiming to have incurred during the year. We need to ensure that all this is supported adequately. So basically, that's why there is need for that interim audit.
Okay, thank you very much, Bernard. Yes, so now the floor is open for questions. If you'd like to raise your question, we can unlock for you the mic and you feel free to ask your question. We are also, just a reminder that we'll also be taking any questions on email. The email is attached on the chat section. So yeah, you can feel free to shoot us an email or a message on any of our social media handles. Okay, just another question for Jacob. To what extent does the use of software and technology mitigate any of the challenges that you highlighted in the accounting process?
So automation basically deals with two things majorly, apart from many other small things. It deals with the time saving, make sure that you do the job in time, and to minimize the errors which can be there as a result of the human element in the process. So once you automate, you eliminate those two. But automation has got several other uses. These are just the two major ones.
And while we're on that topic, I mean, I'm from a tech background, and I might have to ask, has there been any significant impact from artificial intelligence on the industry?
Artificial intelligence is still an emerging industry, which is still growing. So at the moment, there is not much impact on the same, but it is one of the future trends.
Okay, thank you. I guess if we have no more questions or any more questions, I think, Jacob, you can give us a few closing remarks.
Thank you, Leonard, and thank you for the team for attending. As I had mentioned, is that all these things are interconnected. Proper period closure prepares the accounts, which are then going to be audited. So if you do a proper work at period close, it ensures that even the audit process is going to be easier. And this one saves the organization time and money because after the audit, it goes for tax computations, which will expose any gaps which were there. And in this modern world of KRA, we just have to make sure that our records are proper and make sure that the audit period is done successfully to ensure that the organization is safe. Some compliance issues are very expensive to deal with and can derail the growth pattern of an organization, as well as the proper period close is tied to KPIs of many accounting staff, because you can imagine if there was a mismatch or an omission on your end that the auditor is able to expose, or the tax experts is able to expose, and then it exposes the company to huge financial losses. This one definitely will ensure that even your future in that organization might not be very assured. So in Sterling Africa, this is what we do. We ensure that we do all this. And for further information, you can always feel free to contact us. Our contacts have been shared. So thank you for attending.
All right. Thank you, Jacob. Thank you, Bernard, for your insights through the session. Thank you, everybody, for joining us. Just a reminder again, you can always email us through the contacts I've shared on the chat section. We will also be having another webinar on implementation of the Finance Act 2023 in matters payroll. If you follow any of our social medias, you will be updated on the exact date and time of that particular webinar. Yeah, so thank you so much for joining, and I hope to receive your questions. Or you could also share any topics you'd like us to touch on in matters accounting, audit, immigration as well. Yes. So thank you, and you may leave the session at your leisure.